Hey everyone, in this video I'm going to compare three truly innovative up and coming electric vehicle companies that are just getting started ramping up production and producing vehicles. That is, I'm going to compare Canoo versus Fisker versus Nikola and answer which one of these three EV stocks is the best one to buy. So I'm going to compare them across 5 metrics and then I will answer the question which one is the better buy. And the reason I'm showing the revenue chart is really to demonstrate how new these companies are, how little they've sold into the market so far. Up until now, Nikola's made the most products with its battery electric trucks at 60 million in revenue. Still very new. It's still got very few trucks on the road. It's really just now ramping up production. The same goes for Fisker. Very new, right? 528,000 in sales. Just getting approval to sell its newest model in the US. Really just getting started. And then Canoo, no revenue just yet. The word was from management that in its third quarter is when it was really going to start delivering cars. It's got deals in place. It's got a deal with Walmart in place. It's really just got to get the production started and putting the cars into the market. So very up and coming, new stocks, new companies trying to enter the market, enter this competitive space and take some market share. So since they're not generating revenue, one of the things I want to look at is, do they have cash to survive and sustain themselves until they get their products to market? And looking at this metric, Fisker has the most cash at 652 million. Canoo is running dangerously low on cash at 6.715 million at its latest update, and Nikola in the middle of the field at 121 million. Well, so now that we know how much cash they have on hand, let's see how much cash they're going through, how much cash they're burning in operations. And on this metric, Canoo burned the least amount of cash in its most recent quarter at 67 million, but it's barely got any cash on hand. Fisker was the second worst, that's 83.74 million, and given that it's got 652 million in cash, it's got several quarters to go at this rate before it runs out of cash and needs to tap into capital markets again. Nikola, the worst of the bunch, burned through 180 million in its most recent quarter, and it has only 120 million. So it cannot continue at this pace. It needs to slow down, or it needs to tap into capital markets and raise more cash, which could dilute shareholders. And speaking of diluting shareholders, that's the next thing I want to look at when you're looking at companies with these kinds of characteristics, not making sales, burning through cash. They're clearly needing to raise capital, and one way they raise capital is by selling more stock and diluting shareholders. So Nikola has done a reasonable amount of dilution, going from roughly 400 million shares outstanding in the last, let's go 3 years, from 400 million all the way up to 550 million in shares outstanding. Fisker has done a good job of not diluting shareholders too much. Barely rising in terms of shares outstanding to 321 million. And Canoo is the worst of the bunch, going from roughly 100 million shares outstanding up to 418 million shares outstanding. Now, why is this important? Is because if or when these companies eventually become profitable, those profits will need to be split among more shares. So if you had 100 shares and there was only 1,000 shares outstanding, you were entitled to 10% of the company's profits. If that all of a sudden ballooned to 100,000 shares, or if that ballooned to 100,000 shares and you still only had 100 shares, you now have a much more smaller piece of that company. You went from 10% to less than 1% in that case, and so you got diluted. Your ownership got diluted, which is not desirable if you are a shareholder. So finally, I wanted to look at valuation, and really the only thing I could use is the forward price to sales. I guess I could use enterprise value to sales, but to keep it simple, I chose forward price to sales here. And the most expensive is Nikola at a forward price to sales of 1.9. Then it's Fisker at 0.5, and the cheapest is Canoo at 0.29. But if I had to pick one of these three innovative EV stocks, I like that Fisker has the most cash, has diluted shareholders the least, and is almost to the point where it's going to start delivering cars in meaningful quantities. So for those reasons, I would pick Fisker among these three as the innovative EV stock to buy. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.